Yes. Well, first of all, thank you for having me, Jessica. It's a pleasure. Um, uh, on minimum advertised price, no, we don't use that. Um, we don't feel that we should be the ones deciding on price. That's really the retailer's job. I do know that it's uh, a mechanism to kind of stabilize a little bit what's going on in the market, and as much as possible have everybody pay the same price or close to the same price. But I think you get into a discussion that's really not our responsibility.
Okay. So companies like Mondelez has had to increase prices quite a bit over the last 12 months or so. How are consumers taking those price hikes and how is it affecting volumes?
Yes, we've had to because the amount of inflation that we're seeing in our input cost is so high that the other methodologies or techniques that we use to try to offset inflation that always exists, RGM, called revenue growth management, or cost controls, are just insufficient at the moment. We still use them, but the amount of inflation that we're seeing is so big that we are obliged to increase our prices. Um, that has been more than we would have anticipated at the beginning of the year, at the middle of the year, because it keeps on going. And the big surprise in all that has been the consumer, who, now, in our categories, but I would say in grocery in general, and particularly in food, has been very resilient because they see these prices going up in about everything they buy, because this is not just food or household products, this is across the board.
Mhm.
And so I think there's a number of things going on with the consumer. First of all, they're coming out of the pandemic. They've had some good savings, and they can use those savings. Second, there's a bit of a feeling like, okay, we've been locked up, we've gone through a rough period, I want to enjoy life. And I think third, they've started to appreciate living at home more, and so they pay a lot of attention to buying food for the home, to buying snacks for the home. And so all those factors are causing that, in fact, the volumes, our volumes particular, but our categories also have continued to increase despite the heavy price increases. Um, Last quarter in the US, we did have a negative volume growth, but that was largely driven through supply chain issues that we've had, not necessarily because of the consumer buying less. So
And in Europe, you also had a negative volume as well.
yes, that was driven by something else. In Europe, the discussion about price increases um, can sometimes be relatively controversial and difficult with clients. It's a bit of a strange system, but then typically you end up in a period where you can't sell to the clients, or you run no more promotions with them, or they don't want to buy from you until the negotiation comes to an end. What is the price increase going to be? So the reason for the negative volume in Europe was largely driven by the fact that we had a number of what we call client disruptions, and where we were not able to sell to them.
So for the layman, that basically means you're not selling to a grocery store until you iron out what the price increase will be.
That's typically what happens in Europe. Yes. Well, we're not selling. We're saying we'll sell you at the new price, and they say we don't want to buy at the new price, and then you get into a discussion about that.
What are you expecting in Europe as we move into the winter and early next year as energy costs get higher?
Well, I think we've already seen the major run up of the energy costs. I think the European consumer is feeling the brunt of the inflation much stronger than the American consumer, because they have these energy costs that are frankly quite steep. And so if we will see a consumer reaction, which I think we're already seeing in Europe in many areas, they spend less on travel, they spend less on clothes, they spend less on eating out, and so on. As I was saying before, not necessarily in grocery shopping and not necessarily in food. But the consumer clearly is feeling the brunt much stronger. So clearly those energy pricing on top of other inflation is having effect on them. The second area where we were worried about energy would be the availability of gas, and as a consequence, will Europe run out of gas? I don't think that will be the case during this winter. And so far, luckily, the winter has been quite mild. October has been mild. November is starting off relatively mild, so that helps. I think the reserves are plentiful at the moment.
Mhm.
But you have to take into account, we will get out of the winter, we will use the reserves, and then there might still not be a solution for the gas shortage that they're experiencing. So if there's going to be problems, I think it's going to be more during the course of next year and potentially going into the winter of next year if there is no solution found.
Are you seeing consumers in Europe or in the US trading down into your more value segments?
Not that much. Again, you have to take into account that I'm talking about chocolate, biscuits, and baked snacks, very particular categories, which are what we call affordable indulgences. And consumer, when they want to relax, they like to have a biscuit, they like to have a piece of chocolate. The cost has gone up, yes, but it's not an exorbitant amount to buy one of our products. And so in general, we've already seen that in recessions, our categories do quite well. So in that sense, I think we will be okay.
We have a question from viewers, and they want to know when does the rise in the price of products end? At what point is the breaking point for consumers? I mean, just for example, I saw in Selfridges an advent calendar from Mondelez was about $15 US, 13 pounds. That's pretty pricey.
Mm-hmm. Well, I maybe two viewpoints or 3 points on that. First of all, because what we take as a principle, we're not trying to increase our margins. So we're trying to increase our prices in line with the cost increases that we see, so that the dollar margin that we make remains the same as before this high inflationary period, not the percentage margin, which goes down. So the thing to keep into account is that inflation is not stopping for next year. We're seeing the same amount of dollar cost increase next year as we have seen this year. So we will need to keep on increasing our prices. From a consumer perspective, I think that I'm talking more about the US consumer here now, that savings that they have and that they are using at the moment, listening to banks and so on, the expectation is that around the middle of the year, if the inflation doesn't ease up, that consumers will start to get particularly nervous about their financial situation. The strange thing about consumers at the moment is that they're nervous about their financials, they're nervous about the current situation, but they're very optimistic about what the next 6 months are going to bring. They believe things will be better 6 months down the road. So there's not a huge worry yet that 6 months down the road, this will be the same or a worse situation. But I think from a financial perspective, looking at savings rates and so on, mid of next year could be the breaking point for the consumer.
Got it. There is politicians in the US that do criticize companies for increasing prices beyond what is necessary. Do you have a response to criticism like that from those types of politicians?
Yes, I can only speak for ourselves, of course. And as I just explained, we are not increasing our prices more than the cost increases that we are seeing. And we're trying to hit price points for our products which are acceptable and still reasonable. Would we prefer to not have to do this? For sure, because this is risky, this could affect our business. And so I think us, particularly in the consumer business, there is a self-regulating mechanism. At a certain stage, consumers will start to say, I really don't need to buy biscuits and chocolate anymore. I can live without them. I don't see that happening. I don't really think that they want to live without them. But so we're sort of self-controlled a little bit by the consumer. And at the same time, we as a principle are not trying to increase our margins. as I said, our margins as a percentage of our net sales are going down, but we're just passing on the cost increases that we're seeing.
Got it. For holiday, what are you expecting? Are you expecting any trade in from higher end chocolates into some of your offerings in Europe? Are you how are you meeting consumers this holiday season?
Yeah, so we're expecting a strong holiday season. We can see that already because there's the buy-in by the trade, and that reflects what they're expecting. As I was saying, it's in times of anxiety and worry, trying to do something for your loved one, for your kids, buying them a nice seasonal chocolate or biscuits is a very normal thing to do. So I think we will see a strong seasonal period. The other thing that we're seeing is that our more premium offers continue to do well. Do we see down trading? Not that much, nor in Europe, nor in the US. Do we see consumers changing channels? Yes. They start to shop more, particularly in Europe, in discounters. And if any reaction, it's not down trading, it's not going to private label, it is switching channels, basically.
Got it. As a way to manage cost, there other CPG companies are looking at this. Have you thought at all about workforce reductions? Is that something you're thinking about for next year?
Not at this stage, no. Because as I was saying before, we are continuing to see good growth in our business. Before all this and during the pandemic, we've continued to increase investments in our brands, and that has given us a certain momentum in our business. Mm-hmm. At the moment, we don't see a volume reaction as I was explaining. So we are in line with what we expect, in fact, slightly above what we expect our financial performance would be. And so there is no reason for us to think about major cost measures. Now, if things change, and if suddenly our volume starts to decline in a major way, yes, then you have to take measures. There's no other way. But for the time being, we believe as long as we keep the price increases within reason, we keep on investing in our brands, communicating with the consumer, give them innovations and new offering, good seasonal offerings, that we can get through this just by continuing to sell well.
Nice. We have a question from the audience, which is, can you comment on the company's progress towards achieving packaging and plastic sustainability goals?
Yes. So the area that we are focused on is largely plastics, flexible plastics. We're not into PET bottles or anything. You have to imagine the wrapper that goes around your Oreo or around your chocolate bar. I would say there's three things there. The first one is, are we making our packaging recyclable, ready for recycling? Because particularly with a wrapper that goes around food, that's not so simple as it relates to protecting the food and everything. And sometimes there's layers in there that don't allow you to recycle the packaging. Mm-hmm. So that's one. We will, by 2025, will be 100% of all our packaging will be ready to recyclable. We are at the moment at 96% already. The second part of the chain is the infrastructure available to collect those flexibles? In many cases, there is infrastructure for the PET bottles, and there is infrastructure for paper, for metal, but not for flexibles. So we need to work with local governments, with local authorities, to make sure that they start to install the capacity to take those flexibles out of the stream. At this stage, only 2-3% of flexibles are having the necessary infrastructure to make that happen. So that's a huge issue. And we hope that over time there will be more infrastructure available. And then the third one is that you need infrastructure that reworks that plastic so that it can be reused. And again, it needs to be food grade flexibles, which have particular requirements as it relates to that. And that was also very very new. So at the moment, what happens, the part that is being recycled is being used in other things than reusing the packaging for our products. It's being used in recycled plastics for plastic goods, basically, but it is being recycled. But we need more of that infrastructure. That's the main issue for us. It's not so much in what we're doing, it's in getting that infrastructure around the world.
Got it. Another ESG goal that I think Mondelez has is to get to 20% of its sales from portion control snacks. How is that going? And how do you think about that now when people might be buying less with economic uncertainty, but also might want to indulge more because chocolate makes people feel good?
Yeah, well, the reason why we think portion control is very important is that we do not believe that the taxation or regulation or imposed measures limiting what the consumer can buy or increasing the price even more through taxes is going to change the consumer's appetite for biscuits and for chocolate. So we believe through education and the understanding that yes, there is a space or a place for indulgent products in a healthy diet, but to a certain degree, to a certain measure. And so it's our strategy to try to educate the consumer to say, this is a reasonable portion. This is what you should imagine eating as a setting. And so we have two ways that we try to do that. The first of all is to make sure that, as you were saying, that 20% of what we sell around the world is going to be in specific portion size, that it's clear that that is a typical portion size, which in our case is 200 kilocalories or less. That's what we call a portion size. The other one is to put clearly on all other products what a good portion is, and to make that clear. If you buy a bar of chocolate, what is a reasonable portion there? We will, between the two, we want to achieve 100%, or it will be indicated on the packaging, or the portion will be there by 2025.
Got it. Shifting back to the US, there is a large grocery deal in the works between Kroger and Albertsons. How would that affect Mondelez? Would they have more leverage to push back on price hikes if this merger is approved?
Yes, I mean, the more you buy, the bigger you are. If you push back, that hurts us more. I mean, it's logic that would be one of the potential risks there. I think that in general, we believe that we will be able to work well with the merged client, and we have a good relationship with both of them. And what we're trying to do is to make sure that consumers come through the door, that they buy the right products, that consumer is happy, they're happy, we're happy. So there's always a solution. But yeah, we'll need to go through a period where we try to find our way. How does this work now with one combined client?
We have another audience question, which is, what are you doing with marketing investment in 2023 versus 2022? Are you investing more in digital?
Yes. So first of all, I cannot comment on the detailed numbers because we have not yet to the market announced what our plans are for 23. But as a principle, as the way we think about investment is every year we try to increase the gross profit we make on our products, and then we reinvest 50% of that gross profit in building our brands, and 50% flows to the bottom line of the business. So that's the financial algorithm that we're trying to achieve, which means that every year our investment in our brands goes up in a significant way. That's very high single digit or double digit increases year over year. Money wise, that probably means about a $300 million increase every year in our investments. And so we are totally planning to continue that. We've continued to do that this year, and we are going to continue to do that next year. So we see our investment in the market or in our products and in our brands increasing. The second part to that is that digital is becoming more and more important. We have gradually increased our investment in digital. We are now well over 60% of our media investment is in digital, that percentage will continue to go up. The return on investment we're seeing on our digital investments is very good. Since less and less people are watching TV or using other types of media, the return on those media keeps on going down. And so, yeah, it's logic that our digital investments will continue to increase.
Speaking of digital advertising, Mondelez is a big advertiser on Twitter, which has a new owner, Elon Musk, world's richest man. We've seen that you have pulled advertising from Twitter. Can you comment at all on that, on if you have and why, and when you would restart?
Yes, so I would say on Twitter and on any of the digital media, it is less obvious because of the amount of content that there is compared to a TV station, let's say. What we ask the different media companies to do is to make sure that our advertising, let's say for an Oreo or for a Swedish fish, appears next to the right content. And for years, we've been working with them to make sure that they can control that on where does our advertising appear. Some of them have made good progress, others have made not so great progress in that sense. What we've seen recently, since the change in Twitter and on Twitter has been announced, we've seen the amount of hate speech increase significantly. And we felt that there is a risk that our advertising would appear next to the wrong messages. And as a consequence, we have decided to take a pause and a break until it is clear to us that that risk is as low as possible. And so we will wait to see what happens. You've seen the discussion in the media, what might happen on the Twitter platform. So for us, it's a wait and see attitude until we have clarity that our brands will not be affected by this.
Got it. So I wanted to ask about your efforts to be #1 in chocolate. That would mean unseating Mars. How is that going? Where you don't have a very big presence in the US. Do you need the US to become #1, or do you have emerging markets to conquer? How is that? What's the plan?
Yeah, so by itself, we don't necessarily, that's not an objective of ours to unseat Mars. What we are trying to do is to sell more products of our brands to more consumers every day. That's what we're trying to do. If you look at the current dynamics that are at play, and you look at what are the segments between the chocolate in the chocolate market. So Mars largely plays into candy bars. We largely play in chocolate tablets. We also play in what we call pralines and in gifting and in seasonals. They do too, but if you look at the layout of their portfolio and our portfolio, we have more momentum in our portfolio. So naturally, there is a dynamic at work at the moment that could cause that to happen. The second thing is that, yes, there is a geographical component to it, and we're trying in the markets that we're not present to become more present. There's many opportunities around the world. The US is a big one for us because we do not have a real chocolate business. We have Hu chocolate and a little bit of green and blacks, and that's about it. So it's not going to be necessary to have the US, but to have a more significant presence in the US would be very welcome from my perspective. But we don't need that to become the chocolate leaders.
Would you ever make another run at Hershey? That would get you very well into the US.
I have to say that Hershey has been doing very well. And while I think the opportunity was there a number of years ago, it's not so obvious at this stage anymore. We don't necessarily aim to do big acquisitions anymore. We believe on bolt-on, smaller companies, strategically around the world, where we can really reinforce our presence in certain geographies or in certain segments. So that's really our strategy right now, which is working well for us. So I never say never, but it's not something that's on our radar screen at the moment.
Got it. So it's been 10 years since the separation from Kraft. How do you think it's gone? Do you think the thesis of Mondelez being the growth company in emerging markets has panned out?
I would say yes, it has panned out well. The first 5 years we needed to work, and that was done by my predecessor, and it was done really well. We needed to focus on our margins and sort of getting the base right. And so there was a whole phase of restructuring, getting our supply chain in order, making sure we have the right margins on our products. A tough period, very cost focused, but very well executed. And we're sort of standing on that work that they've done in those first 5 years. The next 5 years, our growth has accelerated, again, benefiting from that work. And so I would say yes, but it needed this period of really getting ourselves set up for good growth. But I would say every year we've now grown faster and faster. Compared to the split, I would say our stock price has more than doubled. So I do think that our shareholders are happy too. So I think, yes, I would say it has worked. It has worked really well.
So revenue sales at Mondelez, 30% is North America. Latin America is about 10. Europe is the bulk, 40%. And then Asia, Middle East, Africa, 23%. Of all of those regions, is there one that you worry the most about or keeps you up at night?
It fluctuates over the years, but today, I mean, it's the European consumer that I'm most worried about. We have a very strong team in Europe. They've gone through a bunch of ups and downs. They know what they're doing. So I have full confidence in, even in the most difficult of circumstances, that they will do really well. But nevertheless, this is an unseen circumstance with the whole inflation, the gas prices, the war that is going on. The European consumer is worried. And so it's not going to be that easy to have a good business there for us. So far, so good, but it's going to be. So today is the European consumer. Always there is a question about what's going to happen to the consumer in emerging markets. It's been a strength for us during the pandemic, and now in this year, it's amazing. There's always a worry that something will happen in a certain country, like now in China, consumers are more locked at home, so their consumption, for instance, of gum, which is a mobile consumption, is going down. So there's always something somewhere going on, but I would say across the board, emerging markets are very strong for us, and I don't see that changing anytime soon. And then the North American consumer, I would say at this stage is in a good place. I hope that will remain like that, but that would not be my main worry in North America at the moment. It's really the European market and the European consumer that is a worry.
Got it. Mondelez was also one of the CPG companies that decided to stay in Russia, and the situation there has basically gotten worse. How do you feel about that decision? And are you thinking about pulling out of Russia at all? And why did you stay to begin with?
Yeah, so first of all, as it relates to our position, we maintain a flexible position, an agile position. We are in a situation where we can stay, and it's going to depend largely of the circumstances, or we're also in a position where we might decide to exit. So it's not a permanent decision. It's going to depend on where do things evolve to. So the question is, why did we stay? We sell biscuits and chocolate, so I'm perfectly aware of that. But we do feel that we are providing a certain service to the consumer. As I was explaining, in difficult times, these are go-to categories. And we don't necessarily feel that the Russian consumer needs to be punished for the decisions that have been made. Second, we have a very dedicated group of people that have been working for us for years. And I find it very difficult to just turn our back to them. So we want to accompany them and make sure that they're okay and that they can continue a good personal and professional life. And at this stage, it didn't feel like it was yet the moment to exit. And then three, we have a whole group of farmers who supply us for our products. that depend largely of us. So we would be not only leaving our own associates behind, but we would have a big effect on the supply chain, on the farmers in Russia. And so we feel that until we have to really go, it's okay. We don't feel like we're supporting the war through what we do. And for the time being, we want to remain as we are. But as I said, we have to be vigilant and we're ready to exit if need to.
Got it. So at Mondelez, you have roughly, I think, a little less than 10 really big global brands like Ritz and Oreo, and then you have local jewels like in North America, Wheat Thins, Barney in Eastern Europe. How do you think about where to invest and what the biggest opportunities for the company are?
First of all, we've ended up in this situation because we've grown through the years through acquisition. So it has been for years our strategy to try to acquire what are the strong local brands. And then over the years, we've been able to extend some of these local brands to more regional and then more global. And so now we make this division. About 45% of our business is in those 8 global brands, and the rest is in about 200 local brands. The decision of where to invest is made by the local team. They need to decide what is going to be the best brand to invest in to get the best growth. And some of these local brands are very strong. They've been part of the local culture for sometimes 100 years. And so if you would come in and say only push our global brands or spend most of your money on the global brands, those local brands would suffer. And it's really the balance that we're interested in. Get the best growth possible through balancing the different brands that you have locally. So the decision is really made locally for us.
Got it. Audience question, which is, can you speak to how you've navigated rolling COVID-19 lockdowns in China and maintained growth or tried to maintain growth there?
Yes, so I think the first thing I would say is kudos to our team in China, who in the pandemic and now also at the start of the pandemic have done a major personal effort to the degree that we can probably not imagine the things they've done. There's stories of them loading their own car full of Oreo boxes and go deliver to supermarkets, or people in the plant not going home and staying there for weeks at an end to keep the plant running, but because they make these bubbles and you have to stay within that bubble. And so first thing is, the reason why we have continued to grow and doing well in China is because of our local team and what they've done and how dedicated they've been to the business. And as I said, things that we have difficulty imagining that we would do it. Second, we have 2 categories. We have gum and we have biscuits, and we invest well in those brands. Every year we invest more. We also have a strategy of extending or expanding distribution. So we're now in 3rd-tier cities. So we still have opportunity to increase our physical distribution, more stores in China. And that has been an important part. So not only do we sell more per store, we can also sell more because we are in more stores. During these lockdowns, what has happened is gum has clearly started to sell less because it's an on-the-go consumption. Biscuits, which is more an at-home consumption, has benefited from these lockdowns. So the balance of the two still gives us almost a double-digit growth in China, which I think is surprising for a lot of people because not a lot of companies are seeing that. But it's because of all those factors. Our brands are doing well, so we're gaining significant market share. Not that the categories by themselves are growing so well, but because of that investment, because of the extension of the distribution, we are gaining market share also. Plant-wise, we have different plants. So if we are in an area where the plant is shut down, we can shift to other plants and we can keep the supply chain going.
Okay. So another audience question came in. which is what can be done and what is being done by Mondelez to help address deforestation associated with the production of chocolate?
So it's a multi-level problem, the cocoa supply chain. Just quickly, a lot of the cocoa in the world is produced, grown in two countries, Ghana and Ivory Coast. And the farmers that grow the cocoa are small farmers with very low income. As a consequence, the issues related to that cocoa supply chain is the living income of those farmers. It's the deforestation, because to grow more cocoa, to have more income, they tend to cut down the forest to plant more cocoa trees. But it's also linked to women's emancipation, to local infrastructure being available, to the farmers using sometimes their kids to work on the farm, and so on. So it's a multiple layer or multiple group of problems, not just deforestation. We believe that the solution for that is education and working with the farmers, trying to educate them so that they have different income streams, so that first of all, that their cocoa farming becomes more efficient, higher yields, better farming practices, so they get more. Second, that they develop other income streams, maybe some cattle, maybe some other crops. That the women also have a role to play in their own businesses or on the farm, and that the kids belong in school. And as part of that, we educate the farmers that cutting down the forest, in fact, is not so great for cocoa, because cocoa needs the protection of the forest. It's a crop or a tree that grows in the shade, so you need that protection. We try to do that farmer by farmer and constantly going back and educating them. We pay them an extra fee on top of the normal price of cocoa, so that they are rewarded to be part of our program and to do what we ask them to do. That whole thing is called Cocoa Life. That program, and so we've worked so far with 200,000 farmers. We invested 400 million in the program. For the next 8 years, we've announced that we will add another 600 million to that program, that we will go to 300,000 farmers, which then will lead that by 2030, all the cocoa we buy will go through our Cocoa Life program, which means no deforestation, as little child labor as we can control, and a better income for the farmers. Basically, that's what we're trying to achieve, and so that's the way we fight deforestation. We've made very good progress on income. We've seen the incomes go up of the farmers. We've also made very good progress on deforestation. We monitor the deforestation through satellite imaging, and we are pretty sure that in the farmers that are in our program, there is no deforestation. And then we also are installing child labor monitoring and remediation services. And at the moment, we have 68% of the farmers which are in that program. We're trying to get that to 100% as much as we can.
Got it. I understand that you're very close for like your chocolate products, like a chocolate tablet. A lot of that comes from Cocoa Life already, but for biscuits, it's a little bit harder to do. Is that the case, and why?
It's the scaling. Oreo uses cocoa, and so the speed at which we can do this to reach these tens of thousands of farmers, 300,000 farmers, which are living in the forest, and then for us to mobilize the necessary resources between us and some of the NGOs we're working with, going there, educating them, getting them as part of the program, getting these remediation and monitoring services in place. It's a question of it's not a question of money. If we could turn the switch tomorrow, we would spend the money to do it. It's more, how fast can you go to make sure that it's a well thought through, in-depth program. So it's the physical availability of people and resources to make this happen. That is the limitation that we face.
All right. So in the US, we do have Cadbury, but we know that it tastes different than what you can get in the UK. I think Hershey has the license here, but can they just change the formula? Can you tell us a little bit about how that works?
Yes, they got a perpetual license here in the US. Cadbury starts from a product which is called crumb. We make the crumb, but then they decide the flavoring and how they want to do that. So yes, that is now to be clear, any chocolate product made in a different plant with different milk with potentially with different sugar on different machinery, there is always a risk that the flavor will be slightly different. But I think they try to fine tune Cadbury to the US consumer, and we try to fine tune the Cadbury for the UK or the Australian or the African consumer, Indian consumer. So that's the reason.
Okay. So just to wrap up, it's been 5 years since you've been CEO. If you look back, you had the pandemic in there, which no one expected. What would you have done differently?
Again, and I mentioned our people around the world several times. I wouldn't have wanted to enter the pandemic with any different team than ours. To see the dedication, the engagement, the sacrifice that people have gone through is quite striking. So I wouldn't change that. I wouldn't have wanted to try to guide a business through the pandemic with anybody else than the Mondelez people. We mobilized very fast. We came up with a program of what our priorities were very fast. I think I'm really thinking about what we would have done differently. I think in some areas we were still a bit too slow. And I don't know what went on with you at the beginning of the pandemic, but it was not easy to understand the seriousness and the magnitude in the beginning. And so if you think about that, if I would have known that it was going to be a 2-year thing with all the consequences it would have, we would have reacted faster. We probably would have put in better protection immediately. We haven't lost a lot of people, but we've lost people of Mondelez in the pandemic. If I could have avoided that, and we're pretty sure that nobody got infected in the plants or in the offices, or well, maybe infected, but nobody died because of that. And so we feel pretty good of what we've done, but still, I think there was 52 people. That's 52 too many. I think the other one is the infrastructure. We were good as it relates to working from home. We didn't skip a beat. We were already very flexible before, but we probably could have had a better infrastructure in place of people working flexible. But on the scale of how flexible were we as a company, people were already working a significant amount, not from the office, wherever they wanted to work from. So we were ready for this. We had the infrastructure in place, but we've now lifted it to another level. If I would have known, I probably would have invested more in the infrastructure earlier. But for the rest, I think we've done well during the pandemic as a business. Very proud of what we have achieved. And so there's not a lot that I would have changed. I think the reaction has been phenomenal from our people. So I would do it again with them.
Okay. I have one more tiny question. It came from somebody that I was talking to about this interview earlier today. They wanted to know why the name of Fig Newtons was just changed to Newtons.
There you got me. I have no idea why we did that, but I can find out. As I was saying before, you run a decentralized structure. Fig Newtons is a very local brand for the US. I suppose that there was a number of consumer reasons why our team thought it was better to change it to Newtons, and probably give them more liberty on what they can do with the product, with the brand. But I'm half guessing here, but I'm certainly going to ask the question now, because now you got me intrigued. Why did we?
It just came up. So
yeah.
Anyway, thank you so much for doing this and answering all of these questions. We really appreciate it. And Yeah, thanks again.
Well, thanks for having me. It was a pleasure talking to you. And I'm going to find out right away.